Hi friends, let's take a look at Ethereum. Ethereum is in one of these positions at the minute where potentially it could turn around, and there'd be reasons for that, and that would be decent to see happen and understandable and go along with the textbooks. But also we have to admit that there is a correlation between Ethereum and Bitcoin, and that if we see the Bitcoin prices drop down to fill in the gap they have on the CMEs, for instance, or some of these other things we talk about in the Bitcoin episode, and I mentioned them as well in the Look Around the Markets episode that I put out today, then we could actually be seeing this scenario play out where we come back down, retest the 618 here, and then move towards the top side, getting a couple of instances of bullish divergence. Now, we have got bullish divergence between these two lows here. Potentially, actually, I'm looking at this on this time frame and seeing that we didn't get a lower low in there, but just dive down the way towards the 4-hour time frame instead, where you can see that we had a lower low compared to this one here. Then you can say that there's this bullish divergence. So are we going to start to see that? And do we need to see this on the daily time frame? And do we need to see this fill in this area first before moving towards the top side thereafter? Or not, essentially? That's the question that we're asking at the minute. There's a few other things that we can look to, such as over here on the 4-hour time frame, we're just moving up above the moving average here on the RSI, trying to climb our way, scrape our way, crawl or struggle out of the bullish control, the bearish control zone. That certainly looks like they've got the sort of upward movement here on the RSI at those lows. Yes, of course, the reason I was talking about it like it wasn't is because we've not actually confirmed in with a local low yet past that 335 area. And if we did do that, then I feel like, revisiting these areas down below again would obviously be much easier. And in a sense, you've got to look towards this key area, key level in the same way as what we were talking about at the 253 area, of course, as well. It's the same sort of significance over there at this 382. If we were to push down past that, then we could be coming in towards the subsequent target, having moved past the 50% here on this one. And of course the 236 is the failure area of this entire Fibonacci. This is only drawn in from the lows over here. This could just simply be reaccommodate any subsequent further low in terms of the price action, but this is just kind of drawn out where our previous low is. When we move past 351, that concept of coming down here towards $310 again is certainly conceivable. This is the sort of scenario that we're thinking about. Could we see a bottom come in here that has the potential for bullish divergence up there on the 24-hour time frame? Is that possible, or will we not actually get that? It's at the minute, there's the potential for us to get some of that, as we've just kind of demonstrated here with these oscillators, but also there's also the potential for this to continue down the way. Now, what's happened with the ADX is we went down below 15, and that's an area where you get to see this volatility really come in. And I would say that when we're in chop below sort of 20 in terms of the ADX there, when it turns red, and you can think, well, maybe we're in a bit of chop at the market. That truly is the case below 15. I should maybe program this better at some point to sort of demarcate the ADX lines into 4 different colors instead of just 2 different colors. But anyhow, then we've moved back up into this sort of slightly calmer waters area. And will that coincide with simply having done what needed to be done in terms of shaking out the market here and moving towards the top side? Or have we done what we needed to do in terms of shaking out those so-called strong hands, and then being able to convert those strong hands to their side of the market? That's the thing, is people talk about weak hands and strong hands, and it's meme language. There's people who played poker before can associate that type of thing with inexperienced poker players and their approach to the game. You could do the same thing in terms of that phrase, weak hands and strong hands. It's not the hand that you're being given, you see. When people talk about in trading, they talk about strong hand being the hands that you have attached to your body here, and how strong they are at holding on to your position. And if you think about it in terms of poker terminology, really the original phrase, strong hands, weak hands, then then you'll know that there's no point in pretending and having a really strong hand that's holding a weak hand, Anyhow, moving on, let's see the pitchfork here, still in play, of course. We've still got these potential, the same story, obviously, because it's another dollar price chart, but we're looking down here now that currently towards this target where the 144 is, the Fibonacci retracement point, the previous low, the 382, and the lower end of the pitchfork. You can see this is the lower warning line. So you can see the stockpile of confluence that we have around this area. So, kind of covered you there for that one. There's a potential to get some bullish divergence. There's also potential for that to kind of fade away. As you can see, if anything, it's easiest to see on that MACD down there in terms of talking about potential. But yes, done. Then the Bitcoin pairing with this one, still looking at the potential here to push on past this neckline. Now, necklines of these head and shoulders should really be considered more of a zone, really, and I'm just going to kind of zone this out a little bit. It doesn't actually even have to work like a head and shoulders, in terms of everything, but it doesn't have to. None of these things have to happen, but let's just kind of say that that's really the zone we need to really be pushing past. Unfortunately, given the sort of nature of these wicks down here at going past the neckline, as forming part of the area between the head and the right shoulder on those lows. So you've got to kind of think about this with a bit more flexibility. So you can see there's a big wick over here in the left shoulder, just as we started, and we've come down to that area just now. So while the neckline could be considered where all these body closes are, and we've moved down below that now, we could say that, well, things will get much stronger should we go past this zone. Of course, this is offering you up a really nice moving through tar, slow motion entry into what could be a pattern here. And I'm not a financial advisor, that's financial advice, of course, but you're seeing this in slow motion. There's plenty of time for this to develop. It's like there's lessons to be had here with both sides of this thing. Should it fail or should it succeed? Looking at this, you've got two ways of measuring this thing. So you've got like the Bulkowski talks about 60% style, and then you've got the full whack-a-dackles, as we like to call it these days on the channel. And the full whack is going to bring you down to the 618 golden pocket zone, testing the 200 simple moving average, testing this key area here that we've got on the charts drawn in between 0.026 and 0.025. Current price is up there at 0.032, and movements down below in terms of going down and getting the 233 simple moving average and a 50% retracement in terms of confluence here on this one with the head and shoulders, and everything is 0.028. And that's talking about in terms of just where we are now, slow motion trading, a 10% profit move on leverage of 10x. That would be 100% of your account value in one trade, but that if your position size return on investment. So that'd be interesting, but you've got to no, it'd be 100%. No, it'd be very, very good, obviously. But who cares? I'm not wanting to shill leverage trading to anybody at all. No way, Jose. Just saying that you don't. I'm just saying that sounds greedy, right? If that sounds greedy, is the point that I'm making, then you don't need to trade that way. Okay, so you get that. And this is, so we're talking about the potential. So that's just simply going as far as that. Going as far as the full measure move, talk about 20%. So you no need to be greedy. That's actually not even the full thing. 20% is the wrong number. It's more like 26%, so you don't need to be greedy. Okay, moving on. I'm going to do the other episodes. YouTube.com/Rocky Outcrop to share this with your friends. I know you want it. It's the best kept secret on YouTube, but it doesn't need to be. It doesn't need to be. And you could. And I hope that you got value from this episode, some takeaway value, so that you can help you with your trading and it integrates well with whatever you're looking at. I really do. I've done a look around the markets episode today, so check that out. I've also published in episodes for Bitcoin, Ethereum, Chainlink, and Tezos for detailed technical analysis just like this one. And I am doing a Bitcoin giveaway. You can see on any of the videos I put out, but it's for the Bitcoin one. I would prefer if you were to go there and check out the Bitcoin videos so that it gets, because I think that's where the growth should be on the channel, but who knows. Just say Rocky you rock in a comment down below all of the videos, but especially the Bitcoin one. I mean, come on. Cheers. Right, catch you next time, and I'll see you in the future. I'll see you roughly 24 to 27 hours from now. I don't know. This episode's maybe a little bit earlier than I'll be able to do tomorrow. Maybe not. It depends. See, the sun's shining at me right now. Should be out there getting some vitamin D. Instead, I'm here spending it with you. So thanks so much. Catch you next time.